So not everybody is paid for their time or by a salary. Some people are paid by the number of units that they produce. This may be common in especially like assembly line work. If you are inspecting items, then you get paid for the number of items that you have inspected. This is called piece rate payment, and it pays workers according to their output, but those workers still have to be paid minimum wage on an hourly basis, and they have to be paid overtime on an hourly basis, and they have those minimums that we have to account for. So we kind of have to keep track of two different systems here. We've got to keep track of how much they're producing in order to pay them appropriately, but then we have to keep track of how many hours have they worked to make sure that what we paid them for their production is compliant with the minimum wage and the overtime regulations. So again, it has to equal minimum wage with overtime as well. So remember, the minimum wage is $7.25 an hour. The overtime for minimum wage, $7.25 times 1.5 is $10.88 an hour. So we've got to make sure that they've made at least, if we know they worked 45 hours, we need to know that their production has been at what they're being paid for their production at least meets those requirements. There are two different ways that we can calculate overtime in these circumstances. First one, we take the units produced times the unit piece rate to get their regular earnings. I'll do an example here in a second. And then take those regular earnings divided by the number of hours that they work. So we still have to track how many hours they work, right? And then we take the hourly rate times 0.5 for an overtime premium, and then we're going to add the two together. So, for example, let's say that you're decorating cakes, and you get paid $10 for each cake that you decorate. And you do it in 40 hours. So you decorate 35 cakes, and you get $10 per cake. So you made $350. You did this in 40 hours. Well, actually, let's just say you did it in 42 hours. So you worked 2 hours of overtime. You're entitled to 2 hours of overtime pay. In order to figure out what that hourly rate is for those 2 hours, we're going to take the regular earnings divided by the total hours. So 350 divided by 42. $8.33 is what you made per hour. Cool, you made at least the minimum wage on an hourly basis. So there's our hourly rate, and then we're going to take our hourly rate times 0.5. So $4.17 overtime premium. So we're going to take our last part, we're going to take our regular earnings plus our overtime premium times our overtime hours. So 350 plus 417 times 2 hours. And this is an example, so that 833 is not going to equal, this is going to be what, 834 here. So 358.34. So we've got to make sure that they're paid $358.34 because they worked 2 hours of overtime. So they're not going to get just the $350 for the cakes. that they decorated, because it took them 42 hours, we've got to make sure that they get a premium amount for the 2 hours of overtime. So that's the first way we can do it, is based on, that overtime rate is based on the number of hours of, converting it to an hourly rate, and then using that hourly rate to calculate the overtime rate. The second method is, instead of converting it to an hourly rate, we're just going to take the per unit rate. Where are we? $10 per cake, and we're going to multiply that by 1.5. Right? But in order to do that, we have to know how many cakes were decorated during those 2 hours. Okay? So for that one, we'll still stick with 35 cakes. So we'll say 35 cakes total. $30 cakes were decorated during regular time, 5 cakes during overtime. So 10 times 1.5, what do we get? Did I get that right? Yeah, 10 times, so that's $15 an hour times the 5 cakes. What is that, 75? In this case, they'd be paid $375. Again, you'd want to make sure they were meeting the overtime and minimum wage requirements. So they worked 42 hours. At a minimum, what you do is a separate calculation. If they were paid on an hourly basis, so we've got our minimum wage, $7.25 times 40. Remember, that's $290. And then we take 1088 times 2 hours, which is, well, $21.76. They need to be paid at least $311.76 because they worked 42 hours. They're fine. They're in compliance, right? We're in compliance, I should say. As employers, we're in compliance because we paid them the minimum wage plus what they're entitled to for overtime pay. Okay, but those are the two methods that you can use for calculating piece rate. Let's see. Here's an example of this. So we've got Mustafa. So must be a lion. Paid 12 cents per unit for, okay, so he's inspecting units. So he inspected 4,812 units during a 47.25 hour work week. So he's got 7 and a quarter hours, of overtime, 40 hours of regular. 600 of these units were produced during those 7.25 hours, right? Or inspected, not produced. So he's paid 12 cents per unit. Calculate the gross pay using both piece rate methods. So in the first method, we got to convert this to an hourly rate, right? So he has his total regular earnings. We're going to multiply the total number of units inspected times the amount that he's paid. So he's paid $577.14 in total. If we divide that by the number of hours that he worked, 47.25, he's getting paid a rate of $12.22 per hour, and then we're going to add a premium on top of that for those 7.25 hours that he worked in overtime. So $12.22, we've got to multiply it by the 0.5, so $6.11 per hour is the overtime premium. That's at 7.25 hours. Add those two together, so his gross pay in using the first method, where we're converting it to an hourly rate, is $621.74. In the second method, what we're going to do is we're going to subtract out the units that were inspected in overtime from the total units, because now we've got two separate rates that we have to use for per unit inspected. So 4212, that's 4812 minus the 600 inspected in overtime. 4212, he's going to get paid 12 cents per unit. He's going to get paid 1.5 times per unit for the 600. So 600 times 12 cents per unit times 1.5, so he gets, what, 18 cents per unit? And then we're going to add those two together. So this is his regular, what he inspected during regular time. This is what he inspected during overtime. He's getting paid $613.44. Right? Again, you'd want to make sure, and he does, we can pretty much be assured, we are assured, that that $613.44 and the $621.74 both meet the minimum wage requirements, because if he were paid $7.25 an hour, he would be actually getting paid much less than what he's actually getting paid. Mm-hmm.
Would it be safe to say that the piece rate is the only time you would divide by the total hours worked versus the standard 40 or the 52 weeks or the 20?
Well, we did that in the fluctuating work weeks too. We had two methods where we could do it with the fluctuating work weeks, where we divided by the total hours, or we could divide by the 40 hours. So those were, let me show you. Where are we? So this one, we could divide by 45 here, or we could divide by 40. Yeah, so in that method, we could do the same thing. Yeah. This is another example. I'm going to skip over this one. You guys can look at it. It's the same concept. This is inspecting shellfish. So we also have different types of incentive plans. So these are plans that encourage individuals to work harder or produce more or inspect more items. And they get rewarded then for increasing their production. So normally they're combined with another type of payment plan. So maybe you make a salary, and then if you're in sales, for example, that's a good example. You sell $10,000 worth of whatever you're selling during that month. If you sell over $10,000, then you get a percentage, or you get a certain amount that's predetermined. And it's to encourage then additional production. So an example here, they've got, so if it's an inspection, so in this one is kind of like a piece rate plan here. So you get 18 cents per unit if you inspect up to 2,000 units per week. But if you inspect between 2,001 and 3,500 units, then those units, it's a tiered plan, you're going to get 24 cents per unit. So you're getting a 50% increase if you inspect additional units. And then if you inspect even more than 3,500, you're going to get a 36% or 36 cent per unit payment. So again, it's to encourage more production from individuals in their pay. Commissions. So we usually think of this with regard to sales. And again, this would be like an amount over and above what their normal pay is. So we've got Sam. Sam sold $40,000 of product. His quota is $31,500. So he has to at least meet $31,500 in sales. He gets 2% of anything over and above that quota of $31,500. He sold $40,000. So his annual base salary is $30,000, and he gets paid biweekly if we calculate his total gross pay. Biweekly, so first thing we want to do is calculate what his normal pay is if he didn't meet the quota, or if he didn't, if he got to the $31,500. So we take the $30,000 divided by the number of pays he has per year. In this case, it's 26. So his base earnings, $1,153.85, but he also exceeded his quota, so he's going to get 2% of the amount over and above the quota. We want to figure out how much over and above the quota he sold. So $40,000 minus $31,500, so he $8,500 over and above that quota. He's going to get 2% of that $8,500, $170 commission, and then we add the two together. right? It does get a little bit complicated when somebody doesn't meet their quota, because then what happens is they'll still get their base earnings, but any future amount that they exceed the quota by is going to subtract first from their deficit. So for example, if he sold $30,000, so he was $1,500 short. So he would get, and there would be an agreement. He would understand what that is, but maybe 2% of that 1,500 would then be subtracted from future quotas that he does make, so that it evens out. So he's only really getting that, but he's still going to get his base earnings. He's going to get that minimum amount in his paycheck. It's just that he may be in the hole in the future for future sales commissions. Okay, I've got 3 minutes left. Non-discretionary bonuses. Remember, these are bonuses that the employee knows that they're going to receive. They know how to receive it. They know what they need to do in order to receive it. They have some amount of control over whether they receive that bonus or not, right? Bonuses that are part of the employee's wage rates are included for the period covered by the bonus. That means when you're calculating that hourly rate or the overtime rate, you include the bonus in the calculation. So we've got Jamil, $13.50 an hour. He has a safety performance bonus of $85 that's being included this week, but he also worked overtime. So his overtime rate is not going to be based only on the $13.50. We're also going to add the $85 to calculate the overtime rate. So $13.50 times 44 hours plus 85, 675 divided by, so his regular, this is all to calculate his regular rate of pay of $15.43 an hour. Then we add on the overtime premium and 4 hours of overtime. So his overtime is going to include that $85. The calculation of overtime is going to include that $85 in figuring that out. And that's going to be added as well. Profit, there's just some different types of profit sharing plans. Cash, obviously bonuses. Profits paid into retirement accounts can be part of profit sharing plans or distributed as stock. They've got some special tax rules associated with them as well. All right, we did it. Chapter 2. That's a lot. So on Thursday,